What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is May 31st of 2019. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, we've really got two key focus points to touch on. We're going to start off by taking a look at the wild price action in crypto markets, where we saw Bitcoin go all the way to 9,100 and in a matter of 6 hours reverse the trend sharply down to the low $8,000 range. And then outside of that as well, we've got to focus in on equity markets and how, even though the pundits are playing down the fear, that the fundamentals are just as flawed as they seem. So we've got lots to discuss. Let's not push it off any longer right after our quick sponsor.
Oh. All right.
Alrighty, everyone, so let's go ahead and take a real quick look over crypto markets and then dive more into the technicals and price action. The good news here is that over the last 7 days, even with this pretty stark sell-off we've seen in reversal and trend, we still see the vast majority of altcoins, including Bitcoin, in this case is the market lead, still in the green with a few exceptions in the red over the last 7 days. However, in the last 24 hours, it's pretty clear the trend has reversed and that a lot of altcoins are in the red, closing down on gains that they've made ever since Bitcoin made the move from 8,300 all the way up to the upper $8,000 range, and towards the recent peak at 9,100, which was very, very short-lived. We're going to talk about that as we go through price in just a bit. Now we can see here as well on overall market capitalization, again, as I was pointing out, ever since we got the leap up in the later part of May, where Bitcoin again went from the lower 8,000 range to the upper 8,000 range, we did get a lot of gain in valuation, but we've come down and closed on a lot of that, well over more than half of the gains we've had over the last 7 days of price action. So again, good thing to note here, if we start to see a collapse below 260 billion, I would have no doubt we're probably going to come back down to the lower $240 million range and maybe even continue lower to get the correction for Bitcoin to go down to 6,000. Interestingly enough as well, Bitcoin dominance still holding, I think, a decent solidification of a lot of its gains here at around the 55.8 to 56% market dominance mark. Now, jumping over to the charts, I really want to send a few clear signals to you guys and just kind of get a few messages across and everything, because again, I want you all to make your own trading decisions, but I want to show you all how I think in regards to charts. I don't overcomplicate things. I look for momentum. I look for what the market's trying to tell me in price, because price is clear, it's transparent. There's bids and asks, there's actual orders being placed on the market, and there's a lot of indicators that, though they are very good and you can use them to gauge risk and reward and also kind of signal what the market's saying, I think price can tell you so much. And what we've seen with Bitcoin is that Bitcoin has obviously entered into a very parabolic phase. Now, this is a little bit different from what we saw back in 2015. Okay, this is much stronger coming out of the almost consolidation period where we were going sideways through the first quarter of 2019. Right, in the second quarter, we have really picked up pace in April, May, and as we step into June, it's a question of, can we continue this, right? Can we keep going higher? Now, I want to go ahead and take a look at a shorter time frame, but before we jump into that, let's take a look at the daily and what the daily can tell us. Well, we can obviously see that exponential price action at play. It's right here on the chart. You can see we've drawn a general parabolic line here that's matched with most of the lows here for Bitcoin, and what this is basically showing, what I'm trying to demonstrate with this, is that when markets move in parabolic nature, guys, there's not too much complication you have to have on charting it. It's just a matter of, can it keep up the momentum? Can the lows keep up with this vertical, almost vertical line where price action needs to move up higher and higher, and it needs to set lows or relative lows faster and faster and faster, right? So basically, you can see here, for example, we've had nice periods of time where once we move up, we can have some time to push sideways, we can retrace a little bit and basically set those lows over a longer period of time. But then again, it starts to get more exponential in the price. It starts to get shorter on the corrections, and it starts to move up more vertically, right? And right now we're testing very close to that. And I have to be fair, guys, with the weakness in volume that we had in regards to Bitcoin as it started to push sideways. And the pretty sheer amount of volume we had coming in the other day, 31,000 Bitcoin being traded on GDAX alone. And that pretty clear reversal on the price action. I'll go ahead and show it to you guys. We're looking at the 30-minute here, that pretty much just in a matter of a few minutes closed down on what was a huge amount of gains for Bitcoin. I have to say this is not looking too, pretty in this case. The reason why I say that is, as an investor, as a trader, as someone who was maybe playing for that speculative play to 10,000, if I saw this happen, if I saw this breakout with a decent amount of volume coming in and then instant reversal, any advanced trader in the space will look at that as they would, for example, if price were to deplete very quickly and then pop up as a stop hunt. Okay, so if you guys don't know what a stop hunt is, sometimes markets will basically, or a lot of people who kind of run the market will basically clear out a lot of stops in this case. So this could be on a short side or a long side, and basically what they'll do start to lead towards some exponential like depletion, in this case of price. So for example, we saw it go from 87.50 to 900, and this gives an opportunity for some of the major movers in the market who are going to push price, in this case a certain direction, gives them an opportunity to kind of get into lower positions, in this case, provide them a better risk to reward profile. And as you can see here, that's exactly what happened. Like, there's nothing else to explain this. There was no news. There was, no major shift that happened. Satoshi Nakamoto didn't come out and say that every Bitcoin owner gets a free CryptoKitty. No, it was just purely the market at play. A very select few individuals who can dictate Bitcoin's price within this relative range that we're looking at, right? And I can tell you, that doesn't make me feel good as a trader. The psychology that's going through my head from someone who's trading in equities, commodities, and crypto is that, okay, I not only know that on the longer term time frame that my risk to reward is not very favorable. This is, at 9,000, for example, from this low down here, is very, very close to a 3x, right? If this goes to 9,300, that's a 3x from the lows. Okay, roughly speaking, you can get it specific about a few dollars off, but 93, 94, 9,500, whatever, you're getting near a 3x there, guys. I mean, in a very short period of time for Bitcoin. And it's good to see, but I don't know if this can continue upwards towards 10,000. Now, let's go ahead and talk in the short-term time frame. What are some of the prices that I'm watching here to kind of, again, if we're still kind of back in this range, what I called the twilight zone originally, when you're stuck in this position where it could either be a big breakdown to 6,000 or, still a nice breakout to 10,000, what am I looking for? Well, I'd like to see us get above 8,400 and really get some serious volume coming in if that's the case. Because I did talk in the previous video about how we had a very good chance that we would come back down and make support and retrace some of the weekly gains back onto this level of previous resistance. Why? Because on every weekly candle, take a look at this. We did talk about it on one of the previous daily updates that if price were to continue higher, no matter what, we do need to retrace down on the weekly pattern and close down on some of the previous gains for the previous week. This has happened on most of the previous weeks. We could see here, for example, where the weekly candle retraced a good amount of the previous weekly gains. Same here, for example, and then we continued higher in that case. So we have gotten that so far. This could still reverse. This is we're only on the 27th, so we still got a few more. The candle started on the 27th. We're only on the 31st, so we've still got some time for this to move higher, but it's got to move quick. As you can see here, the parabolic line is showing that. Now, in the sense of a breakdown, so one other side of the equation I didn't show, we'll jump into the other cryptocurrencies in just a sec, guys. The other one that I would say to watch on is if Bitcoin's price breaks below 8,100 and, again, volume starts to pick up and ramp up, that's where I'm going to get a little bit worried. That's where I'm going to start to be confident. Now, I'm already out of my short-term positions. Long-term, obviously, I don't touch. That's what I'll let you guys know about, and I'll let you all know if I enter a position one way or the other. I think that we're getting on pace, though, and getting ready for the next few weeks to go down to 6,000, and that's when I'm really going to average down on some of my longer-term positions. So I'll let you all know about that as well. Alrighty, so let's go ahead, take a look at the daily here for Ethereum and some of the other major altcoins. As much as this was shaping out for a breakout, guys, I think this should have been a warning sign here. As price, for example, was starting to roll over and not continue on the breakout, again, maintaining that momentum. We didn't get the volume, but we are getting some volume on the sell side, over 400k ETH being sold on GDAX alone. And again, same exact kind of fake breakout, rollover. You can't predict a lot of this stuff, guys, and don't beat yourself up if you've been trying to trade and stuff. But I will say that it's a good point that a lot of people kind of press, to take profits and stuff on the longer term swings. We've had a great rally, and not to mention, if you don't want to take profits, to just kind of hold out for the longer game, not try to trade this market. People will toss you out. That's why I recommend staying away personally. Again, I can't give you financial advice, but stay away from margin trading. Stay away from all that crap. It's not for crypto yet. Crypto needs to become a much more stable market, much less volatile for margin to even be necessary. And then Litecoin as well. Litecoin was pretty overextended, to be fair, guys, in the short term, moving up more. Almost really, I'd say it was at least a 5x in this case, but very, very close to moving up towards 6x in this case from its lows. So I honestly, I wasn't looking at Litecoin for any kind of position just yet. Not to mention as well, I want to see some of the value that has come into price being materialized through the supposed implementation of Mimblewimble. Would make Litecoin the biggest privacy coin, which would be really exciting. And fungibility and privacy are very important features to me, but also, this is one of the more extended large cap altcoins. So I'm going to be patient on that. Now, we're going to take a look at a few more altcoins, guys. Two more. We're going to take a look at Bitcoin Cash. Bitcoin Cash right now, again, another player, has easily 4x'd in this case. I think we need to see a cool down period, at least see about a 40 to 50% retracement. And that could lead us back down to this support range that we've seen from the previous high in this case. That would take us down to 240. And look at that. That's right about where we found support last time. It would be good to see, right? All right, so let's go ahead and hop into Binance, because there's one altcoin that I want to talk about that I know a lot of people have been asking for me to just kind of hit on recently, and that is EOS. Now, let me go ahead and get the USD chart here, USD Tether, and we have to talk about this. Now, we obviously saw the correction in the market over the last few hours, and this is obviously following Bitcoin, but I will tell you all, as much as EOS has moved up, I will say to keep an eye tomorrow on the Block 1 announcement. There is a lot of exciting little rumors going on with what EOS is going to reveal. Dan Larimer has obviously been not shy of sharing what they're planning on doing. You can get some decent hints as to what they're doing. They're interested in, doing very similar to what's happening in the DeFi movement and Ethereum with the programmable use cases of the dollar, or programmable stable coins in this case. And with the block producers and everything that have come into the Ethereum, into the EOS framework, there's a lot of interesting things that EOS has done right. I have to give credit to them, but I'd say just to keep an eye on it. I'm not holding any serious position in EOS, guys, but keep an eye on the Block 1 announcement tomorrow, because if there is some exciting stuff going on that really might lead this to continuing its uptrend, it might be good. Might lead towards a dump though, however, and it might be a good point, for those of you who are long on the EOS vision, to possibly scoop some up if the price goes down enough. So I'm also going to be watching for that as well. All right, I've rambled on enough about this, guys, in crypto markets. Not too much news going on, just minuscule stuff, going on even in a market where we saw this kind of wild price action. But we've got to talk about the macro picture in equity markets. So U.S. futures right now are down roughly around 1 to 1.5%, depending on what index you're looking at. We're seeing really the NASDAQ and the Russell bleeding the most right now. And this is following most European, Asia indicators. I think you've got growing fears of the trade war. You've got growing fears, again, of the continued sell-off, the clear tops we're seeing in markets in the sense of price. And I think this is all kind of coming in combination with a growing fear of exiting liquidity due to the fact that central banks are not providing relief. So we're going to take a look through a few articles here. The first one we're going to take a look at is from Bloomberg. So Morgan Stanley's Gorman, sorry, I was about to say Goldman Sachs. Did they have a merge or something? Morgan Stanley's Gorman says stocks collapse is unlikely. Now, the major thing that he kind of played on in the article is that a lot of the move towards treasuries over the last few weeks, the really nice performance in bonds and treasuries that we've seen, and how the supposed bond or treasury bull market is back, is just kind of fluff. It's a short, it's a fart in the wind. It's a short-term trend, and that the trade war has already been priced in. But there's a few points in this article that I really want to hit on that I'd like to point out that I disagree with. So let's go ahead and read his first quote here. The problematic risk in the equity markets has more downside than upside in this case. So He said that in this case, he was doing an interview with Bloomberg. The magnitude is not so big. I don't think we're looking at a collapse. Okay, now I'll be fair. I'm not going to say set in stone and stuff that we're going to look for a collapse. And I'll mention to you guys the price range that I'm looking for a collapse. In this case, a serious 50% correction in equities. But some of the things he mentioned here, are quite. I think, again, it's the arrogance of kind of like mainstream finance in this case. It's just not being honest with what's going on in reality, because equity markets want to just hear positive news, especially if you've got serious bags in it, just like crypto, right? People are very arrogant to just kind of keep it a narrow viewpoint. The mainstream analytics will tell us that unemployment is at 3.6%. U.S. fundamentals are solid, and any recession would likely be a shallow and short period of time. Well, I want to mention a few things here. The first point I want to mention here is that they also mentioned later on in the article that inflation has been minimal, and that's not really the case. So there's a really good website that I recommend you guys look at. I know it doesn't look like the most prestigious website, but most of these data websites are not going to be, Yahoo News or something like that, where everything's very colorful and pretty, because it's not a major company in this case. Shadow Government Statistics basically gives you a perspective of different ranking statistics, and it's pure numbers and everything, but it's different varying measurements of getting that data. So, for example, consumer inflation in this case. Over the last few years, you can see the separation of how the consumer price index, which basically is supposed to measure the broad market of prices, in this case, to show us inflation. You can see the differing rates here as their original measurement that was measured in the 1980s is split off from where it is nowadays. Now, I will give it some leeway in this case. And again, this is why I always view things in a non-black and white nature. You don't want to take the CPI at face value, because you know that there is definitely a lot of manipulative factors, as we'll take a look at with the unemployment numbers. But also, you have to measure CPI, or you have to measure basically the consumer price index a little bit different, because you have different goods and services that are seen as everyday things that a individual will need. Basically, the cost of everyday living for an average American, right? So I'd say, to be neutral, it's somewhere in between here, around 6 to 7%. But nonetheless, this is much higher than what's being reported and is still relatively high. I can tell you all, the CPI doesn't factor for a lot of food products, a lot of things that you would use in your everyday life that they should be measuring for. So the economy is experiencing some decent inflation. The Fed's getting well beyond its target of inflation. But what if they're saying that 2% under their measurement is what they're looking for? What are they really looking for under the surface, right? Just remember, inflation's a hidden tax, folks. Now, going on as well, to take a look at the unemployment rate, you have to go, I would say that the best measure here to take a look at, as much as I'd say it's still probably a little bit higher, would be the broadest measurement that is used by the Bureau of Labor Statistics, one of their wider measurements that they have. And these are individuals, for example, who have given up looking for work, are working part-time in this case, and aren't working a full-time job. So I would say, again, you're somewhere in the band between these two statistics if you want to talk about relative real unemployment. And again, this is just the general fundamentals, guys. But as we go through here, the major thing that I want to talk about towards the end here is, basically his last point in the article is that much of the risk of the U.S. and the China trade war has been priced in, that we've priced in a full-blown 25% tariff on all Chinese imports to the United States. The thing I'd say is that's not the case, in my opinion, and I'll explain why, and I'll actually back it up with a little bit of data. So, people don't understand the ramifications of what this will mean for a lot of U.S. companies. And that is that if we do have these full-blown tariffs, and not to mention if they get worse, this is going to harp one of the biggest things that has helped up U.S. markets: stock buybacks and dividends. If you have to cut dividends due to lack of corporate profits or growth in corporate profits, that's going to keep investors away. Fixed income market's going to kick them out. I would say not fixed income. I would say, basically residual investors who are basically picking up and investing for the long term. It's going to make them stop adding to their positions. Hedge funds, investment banks, whatever it may be, they're going to step away. And especially if you cut enough to where that direct entry of liquidity, the stock buybacks, comes out of the market. Both of those are beneficial for stock prices because a lot of people are taking their dividends and they're doing DRIP programs, their dividend reinvestment programs. A lot of stock buybacks have been the lead in drawing this market upward. If that liquidity dries up, that's less buy-side demand. And we can see here that we had a record year for stock buybacks and dividends. Or in this case, well, we've had one this past year, but in the last quarter, we set a new high in this case out of any time in history. Now, as we get some of the data for Q1 here, we're starting to notice that dividends are dropping. We don't have all the data for stock buybacks just yet on quarter one, but we know that it has been a killer period in this case for stock buybacks. As we can see, the trend has been to the upside. But if we start to see a drop off here, and it's very, very clear for a quarter or two where stock buybacks and dividends are not increasing in this case, that's going to be a very worrying sign for equities. Now, again, this is all going on towards the topic of the trade war. Is this something we have to worry about? Well, let's go ahead and take a look at price. We already know that as we took a look at, futures are down quite nicely. In this case, sorry, I'll go ahead and just get the I want to get the U.S. indices just to see where we're at right now. So if we're expecting indices to be down around 1.1 to 1.5% here, this is going to continue the trend here. I would say I'm very worried, on the next level here in the NASDAQ, if we break below these lows at 7,300, I mean, that's going to be, again, you're just clearly in no man's land in this case. You have no serious support ranges. Maybe here at 7,000, big even, held here for a few days. I don't really see it. I think this is really going to go into what we've seen before. If you guys go back to like August of 2015, we had the panic sell-off with fears of growth in China. We've had these kind of sell-offs before. In fact, just in 2018, we had the very serious sell-off here in January and February where things were dropping like a rock. And again, it can be off the shortest and simplest of news. What was, common news just a few days ago can amplify into some serious tensions, especially as these things start to escalate and as central banks are not providing that relief. Again, very similar level here at 2,722, again, for the S&P 500. The Dow Jones, which has given us the clear triple top. I would say if we break below this low over here at around, it's a little bit lower than 25,000, around the 24,900 or $800 range, it's going to be a clear enough signal, guys, that this has got some ways to go. And I want to mention one thing as well, is that the Russell, in this case, I'll go ahead and turn on my drawings here. The Russell, which has usually been one of the leaders in the market, has been the second worst performing major market index for the U.S., behind the Dow Jones from this recovery. It's been weak as hell, to be fair, guys. We've been hitting resistance at 1,600 on the Russell. This is a bunch of small cap companies, so usually higher risk, higher reward. And we've seen people, they're not buying it. It's lower highs in this case. And we're rolling over already below the support range that held 2 times here throughout the first quarter of 2019. What's to say that this isn't going to continue its trend and set in another low down here, right? This would be the next destination, somewhere down in this range. And that is not good for small caps. That means we've got a long way to go. A good 400 to 500 point drop. I would say, about 400 point drop in this case, down to this lower range, depending on when we set that low. So again, just want to put that across to you guys. That's it for today's video. I hope you all are having a fantastic day wherever you are. I know I rambled on as I tend to do, but I hope you all enjoyed the mumbo jumbo that I've compiled together, and I hope you all got something out of it, and definitely would like to know your opinion down in the comments down below about what you think about this data, what you think about what's going on with the growing tensions in equity markets, but also in crypto as well. Do you think we can continue the trend in crypto markets towards 10K and beyond, or do you think that we've got to wait off, have a correction, and then see the continued trend? I'd love to know what you guys think. That being said, hope you all are doing great, and I will see you all in the next video. Stay tuned.